Good afternoon. Welcome to the AboitizPower earnings results briefing for the first 9 months of 2024. My name is Jackie De Jesus, and I will be the moderator for today's call. Before we begin, please allow me to go over the house rules. Number one, we have put microphones on mute to minimize unnecessary background noise during the presentation. Number two, questions have been requested from the audience in advance, which we will answer during the Q&A portion. In case there are more questions from the floor after, you may click on the raise hand button or submit questions via the Q&A box on the webinar controls. Those not taken up during the Q&A will be answered via email. Lastly, this briefing will be recorded. By joining this session, you consent to your name, voice, image, and chat comments being recorded for use in dissemination. So our CFO, Sandra Aboitis, will present the earnings results of AboitizPower. After the presentation, we will open the floor for Q&A. Sandra, you have the floor.
Thank you very much, Jackie, and good afternoon to everybody. Thank you for taking the time to be with us today as we share the results of our third quarter and 9-month financials for 2024. As usual, we'd like to start today's call with a progress update on our renewable growth program. At the start of the year, if you recall, we disclosed that the initial phase of our program would focus on developing solar and onshore wind projects with a cumulative capacity of 1,200 megawatts. At our last briefing, when we discussed first half results, we reported that we have energized 2 new projects in the second quarter of this year. That's the 159 megawatt Lawag solar project in Pangasinan and a 17 megawatt PV binary facility. We are anticipating energizing 2 more solar plants with a total capacity of 218 megawatts before the end of 2024. The first of those 2 projects is our 173 megawatt peak Calatrava solar project in Negros Occidental, which commenced construction in December 2023. That's now at 91.5% completion and is on track to be energized this December. The second project is our 45 megawatt Armenia solar power project in Tarlac. That also started construction in December of last year. It's today at about 86% completed, and that is also on schedule to be energized this December. And then finally, our 212 megawatt Olongapo solar power project in Zambales. That started construction in February this year. Currently, it's at 59% completed, and we're expecting that project to come on stream by the third quarter of next year. Okay, now on to our results, our financial results. For the first 9 months of the year, total energy sold by our generation and rest segments rose 2% year on year. If you exclude the oil plants, growth would have been 3% year on year. Energy sold for ancillary services increased by 77% year on year, and that's primarily due to the implementation of the reserves market, which started in January of this year. Although that market was suspended in March, operations resumed last August 5, so it's been back now for just about 3 months. The 21% year-on-year increase in spot sales was due to higher spot dispatch from Thermal Luzon after its contract with Meralco expired. However, these were offset by the 9% decline in BCQ sales volume, which was dragged down by lower contracts of our oil units, so that's TMI and AUC. The capacity of those plants have been reallocated to sell to the reserves market. Spot volumes have also increased as a function of our lower fuel cost. A lower marginal cost of power, specifically for our coal plants, increases the competitiveness of our plants and leads to higher dispatch and therefore higher spot volumes. Gross margins and energy generated declined slight. Sorry, can you stay on the last slide, please? If you can just go back one more slide. Yeah, here. If you look on the right side, gross margins and energy generated declined slightly quarter to quarter by 7% and 9% respectively, and that's due to lower availability from our thermal facilities and softer Western prices. However, as we explained last quarter, you'll see here that gross margins have expanded for the first 9 months of the year at 12% relative to last year, and that's despite a 10% reduction in revenue. This is primarily because of a significant reduction in generation cost, which has come down 21% year on year. Okay, on to the next slide. If you take a deeper dive into those gross margins, you'll see here that both BCQ revenue rates and spot rates have come down year on year. So the BCQ rates are down primarily because of the fuel revenue component of the rate. and the Newcastle index, which most of our revenue contracts are linked to, has come down by 30%. Spot rates are also down versus last year because of new capacity on the grid and because of the lower fuel costs grid-wide. However, despite the lower BCQ and spot rates, our average margin rate for the first 9 months actually increased by 10% year-on-year to 2.009 pesos per kilowatt hour. Again, this was the direct result of a decline in fuel cost, and that decline in fuel cost is both a result of the coal index is softening, that's Newcastle and ICI, but also because of active supplier management initiatives by our fuel management team to drive down the cost of fuel as much as possible. On a per kilowatt hour basis, our average fuel cost has come down. Sorry, can you stay on that slide just a little bit longer, please? On a per kilowatt hour basis, our average fuel cost has come down by 30%. In addition, our strategic exposure to the spot market has also paid off, as our spot sales contribute the highest margins of all of our sales channels and almost 30% higher than our BCQ margins. So all in all, the increase in gross margins comes from the following: an increase in merchant capacity, which resulted in an increase in spot sales, and a reduction in fuel cost, which led to an expansion of margins specifically for those Western sales. Okay. The year-to-date load-weighted average price, or LWAP, of 5.73 pesos per kilowatt hour was 14% lower than the average LWAP of 6.65 during the same period last year. This was driven by the higher availability of Ilihan, the energization of the Hermosa-San Jose line that alleviated generation curtailment in Bataan, and lower thermal fuel prices overall. The continued downtrend in spot prices reinforces our long-term strategy of reducing our merchant exposure through long-term contracts to lock in favorable margins and reduce the volatility of our earnings. Just this year, EP has been awarded several long-term PSAs totaling almost 1,000 megawatts. As of October, GNPD secured 3 separate PSAs for Meralco's baseload and mid-merit requirements. All of these contracts are 15 years in tenor for a total of 800 megawatts. So that's a 400 megawatt mid-merit contract plus the most recent, in addition to a 300 megawatt baseload and a 100 megawatt baseload. While our thermal Luzon plant successfully won 2 PSAs from Frecor, which is an aggregation of cooperatives for their baseload requirements with a total capacity of about 109 megawatts. So we continue to look for other opportunities to contract the balance of our baseload portfolio. The next CSP that's coming up is coming in this month in November, which is a 600 megawatt CSP also by an aggregation of Luzon cooperatives. For distribution business group, beneficial power sales rose by 8% year-on-year due to higher demand and customer consumption. Of the 370 gigawatt hours increase in beneficial power sales, 40% was attributable to warmer weather. That's our estimate, which is mostly from the residential segment, which is up 14% year-on-year, and the remainder of that's from organic growth. You can see in the chart below, commercial and industrial consumption is up 5% year-on-year. Our beneficial EBITDA for the 9 months and third quarter of 2024 have risen by 12% and 19% respectively, compared to the same period last year. Beneficial EBITDA is up across all 3 of our major business groups. Generation, you'll see there in dark blue, that's up 10%. That's due to the previously mentioned margin expansion. Retail is also up. You'll see retail there in light blue. That's up 11%. No, sorry, that's up 29% to 2.1 billion, and that's due to better quality contracts and higher margin contracts. Distribution is also up 11%. That's due to higher energy sales across the various customer segments. GNPD started to recognize depreciation and interest expense for GNP Unit 1 in March and Unit 2 in April 2024. This has resulted in an increase in interest expense by 26% year-on-year and depreciation by 19% year-on-year. However, despite that, net income for the first 9 months of 2024 was higher by 2% year-on-year at 27.2 billion pesos due to the strong EBITDA growth. Excluding the 3.5 billion of depreciation and interest expense from GNPD, income would have been higher by 15% year-on-year. Our balance sheet continues to be strong. Cash increased by 8% from the end of the year in 2023 as a result of the strong growth in our EBITDA. Investment and advances increased by 5%, primarily due to higher earnings from GNPD and our JV with Scatec, SN AboitizPower. As a result, our net debt to EBITDA ratio and debt to equity ratio remained flat in preparation for the continued growth of our pipeline. To close today's presentation, pleased to share that AboitizPower has received a couple of recognitions for our company's efforts in governance and safety. On September 19, we received the Golden Arrow Award for the third consecutive year. This award acknowledges our efforts to maintain transparency, accountability, and ethical business standards, and it's a testament to our team's dedication in upholding the highest standards of corporate governance. Additionally, last September 2024, our joint venture with Scatec, SN AboitizPower, was recognized at the ASEAN Occupational Safety and Health Network Awards in Singapore, underscoring our drive to provide a safe and healthy work environment for all of our team members. These awards validate our efforts to operate responsibly and sustainably as we strive to transform energy for a better world. They serve to remind us not only about delivering a strong performance, but also about the potential positive impact we can make on our community's environment. Thank you for listening, and with this, we now open the floor for questions.
Thank you, Sandro. Before we move on to our Q&A, we would like to request our audience to complete a poll that will pop out on your screen right now. Okay. While we typically start off with the questions we received in advance, I see that Jeline already has her hand raised. So Jeline, you have the floor.
Hello, can you hear me?
Yes.
Hi, Jeline.
Hello, thank you. Thank you for the opportunity. My first question is on the contracting status of AboitizPower as a portfolio. How much are you contracted currently, and how do you expect the new power supply agreements with Meralco impacting overall EBITDA margin going forward?
Hi, Jeline. Today, we're about between 70 and 75% contracted. This is our base load portfolio, right? So that's basically coal and geothermal together. With these contracts, obviously, all of these contracts still have to undergo approval by ERC. But if you count all of that volume and what we have in the pipeline we're chasing today, that should bring us to over 90% by the end of next year. For that base load portfolio.
Understood. How about the expected impact on margins? I know there are confluence of factors. One would be the margins for these new contracts. Other ones would be how you are positioned on the cost perspective going forward. How should we think about these moving inputs?
Well, margins on these contracts should be a lot more stable, right? Because fuel is a pass-through for these contracts. I'm not sure if we showed it in one of the slides earlier. No, we didn't. But I think, spot rates have also come down. So spot margins are not as high, are not substantially higher today versus BCQ than they were like 6 months ago, because spot prices have softened, right? So the contracts we are winning through the CSPs are still relatively healthy in margin, but we like them because they provide quite a bit of stability to the margin over the foreseeable future.
Yeah. Just as a follow-up, with regard to the non-baseload portfolio, how much of it is currently contracted?
Non-baseload?
Yeah.
So I would say on the renewable side, most of those new plants are fully contracted. Sakasan obviously is a fit plant. It's the oil plants that are not contracted but selling into the reserves market, right? So those oil plants have some contracts that we won through the ASPA CSP last year, but the bulk of that oil capacity is being sold to the reserves market. Again, on the renewable side, most of Geo is Geo's baseload that's contracted, but on the solar and wind, majority of those new assets in the pipeline are fully contracted.
Thank you for the color. And then my second set of questions is on the reserve market. Can you give us an update on actual DON prices and the level of gigawatt hour that run through this particular trading market, and how much was NIAT contribution today and the underlying settlement assumption baked into that?
Sorry, what do you mean by underlying settlement assumption?
Because I recall in the first quarter, you only booked around 30% of the profits that were supposed
Yeah,
to be
right.
recognized because of pending ERC guidance on the
Yeah.
collection.
So we haven't recognized the balance of that 30% yet. But since the market started in August 5, for the third quarter of the year, so that's counting basically August and September, we sold just over 1,000 gigawatt hours of energy to the ancillary services market. Of that 1,000, 30% was in the reserves market, and the rest were through contracts. As far as pricing is concerned, pricing in August was relatively high. It came down in September, and it's come down further in October. Although prices are still higher, the clearing prices are still higher than the historical or legacy non-firm ASPA contracts that NGCP had been signing. Although prices in the Visayas are still generally higher than Luzon, which reflects the tighter supply-demand situation there versus Luzon.
Apologies to push you, but do we have a peso per kilowatt hour reference price
I
on
don't
that?
have it on me. We can give you some color. I mean, just to give you a sense, the non-firm CR prices were 2.25, if I recall, per kilowatt hour. CR prices for the month of October were still higher than that. We can give you more detail through email if you would like.
Yeah, understood. Thank you. I'll just go back to queue. Thank you.
Thank you,
Thanks, Jeline.
Okay, so we'll read through questions that have been sent in earlier. So the next question is really on just operations, on outages. So are there any significant power plant outages expected in the fourth quarter and looking further into 2025?
Yeah, for the remainder of the year, there are scheduled outages for Pagbilao, that's Pagbilao 2, TSI Unit 2, and TVI Unit 1, which is starting in December, but will spill over into next year. And then for the first quarter of next year, there's a planned outage for most of our thermal facilities. So that includes GNPD, GMEC, TVI, and Pagbilao. It's planned that way to avoid having any shutdowns during the elections.
Thanks. That's very clear. The next question is also on the reserves market. How much? Well, I think this was answered. This was answered already earlier. But basically, how much is AP's ancillary energy sales in the third quarter was from the reserves market, and how is it trending for October? I think you mentioned it was 30% of the approximately 1,000 gigawatts sold in the
Right.
third. Okay. The next question is on net generation. What is the allocation of output from the recently energized Lawag and Kayanga solar plants?
I assume this is the allocation between the plants in terms
Yes.
of energy.
Correct.
And if so, 51% of the 178 gigawatt hours that were generated is from Kayanga, and 49% is from Lawag. That's as of September 2024.
Thank you so much. So this next question comes from four analysts, including from the Q&A box today. But basically, this is on the chromite deal. When is the expected timeline for the closing of the chromite gas transaction?
Well, all of our required submissions have been already submitted. We're still awaiting PCC approval along with ERC approval on the ERI contract, both of which haven't happened yet. We're still optimistic we're going to be able to close the transaction within the year, but it's November, right? So it leaves our window quite tight, but we're still hoping to close before the end of the year.
Okay, as a follow-up question to that one, so should the Chromite gas transaction close by the year end, are you able to provide guidance on how much of AP's portion will be paid by the close of the year and how much will be paid in 2025?
Yeah, our share of that acquisition is just over $800 million. And if it closes before the end of the year, then that 800 million will be due this year. And if it spills over into next year, then that full 800 million will be due next year. So it really depends on when the deal closes.
Okay, thank you so much. There are a few questions on the Q&A box, both from Eliza Tay. So the first one is, for renewables that were recently contracted this year, what was the average tariff that it was contracted at?
We can get back to you on details here, but I would say probably in the mid fours. But it's kind of hard to give a single number because some of the contracts are long term and some of them are short term, are sold shorter term via RS, and the shorter term contracts are sold at much higher prices, sometimes close to 6 pesos. Right. So it's really dependent on the type of customer and the tenor of the contract.
Thank you for that. The next question is, for the new GNPD 800 megawatt PSA with Meralco, I noticed that the contracted tariffs are sub 6 pesos per kilowatt hour. Hence, should I expect lower EBITDA per kilowatt distribution margins?
GNPD 800 megawatt PSA. The last contract was 400 megawatts, and the LCW of that contract was, I think, over 7 pesos because it was a mid-merit contract.
Alright.
Unless Eliza's referring to the base load contract.
We
Not sure.
we can clarify offline. Thank you. I don't see any more questions on the Q&A box. Could I check with okay, so Jeline has her hand raised again. Jeline, go ahead.
Thank you. Thanks, Jackie and Sandro. A question on the CBK auction. Where is it at
Yep.
currently? What should be the timeline that we should be looking for?
So Pisam's current timeline is that bidding will happen in end of April, I believe, or is it end of March? We can validate it. It's either end of March or end of April. But they will likely look to close about 5 months after bidding. So what happens is bidding happens either end of March, end of April. Notice of award will happen 1 month later. And then they're hoping to close 5 months from bid date, which would put closing third quarter of next year, assuming it doesn't get delayed again. So that's the timeline we are preparing for.
Understood. And the issue that was flagged before is no longer a hurdle for this bidding, right?
I don't think so, but I guess anything can happen. It's beyond our control.
Understood. And then on the settlement on the reserve market, are there clarity now, or at least on the timing, especially with the reinstatement of Sierra de Malanta?
You're talking about the 70%?
Yes.
Not yet. No
Not
further
yet,
clarity than we had before.
but any indications on when it could be that ironed out?
I think we'll get something before the end of the year. I think the question will be, what will collection look like and how are we going to be able to book it, right? I think what they're also trying to do is manage the impact on the consumer. If you collect it all at one time, the customer rate will spike. So they will likely, I think the feeling we have is they will likely stagger the collection over a period of time. How long that period is, not sure. In order to minimize the impact on the end user.
If I recall correctly, in the first quarter, we recognized around 300 or 500 million on the reserve market trading alone. How much was it in the third quarter at 30% settlement?
We can get back to you on the specific number.
Okay. Understood. Thank you for that. And then lastly, on the dividend outlook, if we do recall, you have a pipeline of potentially big acquisitions or bidding wins, CBK as well as a Chromite deal. How should we think about dividends per share with regard to this? Earnings have been relatively flat as of 9-month trend. But if you look at the history of the company when there are sizable acquisitions, sometimes dividend per share goes down with regard to that. But this time around could be different. How is management thinking about this?
Well, we have a dividend policy of 50%. That's based on 50% of NIAT. That will not change.
Mhm.
And we're expecting all of these, all of the big acquisitions, right? Chromite and CBK are both earnings accretive from day one,
Mhm.
right? And that's really the bulk of the of what's, I guess, in the M&A pipeline, right? And so it'll contribute earnings immediately, which means it should be earnings accretive, which means it should increase our net income, which should increase our dividends per share. Because
Understood.
we're maintaining the 50%, right? So if we expect NIAT to continue to increase, it should increase the dividends per share.
Thank you, Alexandro.
You're
Thank you.
welcome.
Okay. Do you have your hand raised again or? Okay. So again, no questions, no live questions from the Q&A box right now. For the audiences, if you have any questions, please feel free to click on the raise hand button or submit your questions via the Q&A box. Last call. If none, I think we could wrap up today's Q&A session with that. So before we close this meeting, a survey form will pop out for you to type out any additional feedback that you may have in the session. For the benefit of those who missed the session or would like to rewatch the event, a recording of this briefing will be uploaded on our website. So on behalf of Sandra and the entire presentation development team, we would like to thank everybody for joining us today. For those of you who will join us for the earnings call of Aboitis Equity Ventures, see you later at 5 p.m. And for the rest, see you again for a full year briefing in March. Have a good day.
Thank you all for the time. Appreciate it. Have a nice day.